We've got Prabhakar Kudva as well joining in on the show right now from Samviti Capital. Prabhakar, hi, good afternoon. Welcome to ET Now. Wanted to understand how is it that you're mapping the market construct right now? Many believe that this is the best it'll get this year because you'll have elections, then US elections, etc. What is your prognosis of the market right now?
Yeah, good afternoon. Thank you so much for having me. Yeah, like you said, this year is full of very big events. The first one coming up in the month of June, which is the general election results, and that'll be quickly followed by budget, which will the full budget which will come up post the government is elected, and which again will be followed by the U.S. elections. So I think this year is setting up to be an year which will set the tone for the next 2 to 3 years in terms of the direction. We've obviously had a very good last 1 year, in terms of the overall market performance. I'm not sure if a similar year can be repeated, given the set of events that we have ahead of us. But I do feel that given these 2 or 3 big macro events ahead of us, the results of these events will really go to determine how the next 18 to 24 months are going to be.
Absolutely. But what is the sense then right now? Would you say protect capital, take some chips off the table because the year is so full of big events which may come with their share of volatility?
Yeah, given that we've coming on the back of a great year, I do think it does make sense to take this year a bit more conservatively because the same time last year the valuations were down in the dumps, especially for mid and small caps. We've had a stupendous rally, a very broad-based rally in the last 1 year. Valuations have caught up to a large extent. However, there are a lot of new opportunities opening up. From a broader market point of view, I do feel that one should not expect another great year, followed by what we've had. We should probably be a bit more conservative, but there will be big opportunities within specific sectors, specific pockets.
Point taken. So that's a view coming in as far as the market setup is concerned right now. In the last few minutes, we have seen a bit of a move on Newgen Software as well. So that stock is reacting quite positively. Godrej Industries has been inching higher. KPIT Tech is a stock that I want to discuss right now. A good move of around 7% at a time when rest of the IT companies have languished with a single-digit growth, whether large cap or even mid-cap companies. This company has gone ahead and delivered over 40% growth in FY24. And not just that, in the coming year, they're talking about a growth of anywhere between 18 to 22%. Margin also has been, inched up in terms of the guidance. They're now talking about margin to be above 20.5%. This number in FY24 was 20%. So there is that improvement that they're penciling in, and this is coming in after a heavy base. Naresh, what's the view on KPIT Tech as a stock and even Birlasoft for that matter, because the earnings are expected later today? Would you recommend people to book some profits on the likes of KPIT Tech right now, or better to hold it on?
So it's been a relative outperformer clearly. The problem is after such a rally, the risk reward is not great. And when the sector is not doing well, we could get into a consolidation phase. So the view is we could be getting a range bound for KPIT Tech. We're in 1350 on the downside and closer to 1600 on the upside. Could be the range. So it's a stock where you would like to sell on rise rather than at current levels. So any other follow-up towards 1600 odd levels, one could be looking at a sell. Birlasoft similarly has seen a decent enough correction, even though it's been an outperformer. So out here also rise to 750, 770 would be a sell. So the whole IT sector looks like either it could go drift lower or go sideways. So time to be looking at a sell on rise.
Right, okay, that's the take coming in on, some of the constituents of the Nifty. IT, very specific a case. I mean, Tech Mahindra and KPIT perhaps the only standout ones so far, like Anisha was also flagging off earlier. AB Capital, Kunal, that's a stock that's been on your radar, doing very well, and today as well, there's no stopping this one, another 4% bump up. What next?
It looks attractive. In fact, the entire Aditya Birla group of stocks,
Yeah.
I think they've done reasonably well. 37% up so far for AB Capital this month. I think with the volumes and the kind of momentum the stock has shown, I would actually believe that this could be a start of a huge and a big uptrend, because I would sense that the stock today I think has managed to break past about the previous lifetime high levels. This month has been one of the best months in terms of volumes for the stock price. The last time we'd seen such kind of high volume month for AB Capital was, I think, at a point where the stock had moved from 80 to 120, and that was almost like a 1.5 odd year back. So I think the stock is now migrating into that kind of a high territory. I think now from a next 1 to 3 year kind of a time frame, I would look out for targets of anywhere in the range of 350 to 400.
Sure, point taken. Prabhakar, what's your view on BSE? Because, I mean, that stock has taken a tumble of around 14% today. But how much does it undo the fundamental story which was there? I mean, the stock had become, what, 5x in a matter of a year purely because we were talking about a lot more financialization, a lot more people coming into the stock markets. Does that story get undone? Or if not, then one should buy this dip perhaps, right?
Yeah, I think BSE more than the the variable being financialization for BSE, it was more a story of the options volume really picking up because the BSE stock started doing well after the introduction of Sensex options, and subsequently they also introduced the bank variant of the options. So it was the options transactions that was really doing the trick for BSE. I think that continues unabated. I think options volumes have been quite robust. Of course, this notification from SEBI is a one-time hit for BSE and the BSE. And also, more importantly, I think the story for BSE was, the last year's story, whereby a huge re-rating took place on the back of this catalyst, which was the options volume and the subsequent transaction fee from that. I think BSE is now fairly valued. And I think this catalyst of the SEBI, the increase in the fee from SEBI will probably hit the results in the next couple of quarters, and BSE should likely go sideways from here.
Right, okay, that's the take coming in on BSE right now. But Prabhakar, to the point that you were earlier making, that it does make sense to, keep the powder dry, take some chips off the table. Prima facie, what are the sectors which look peaked out to you, or specific cluster of stocks, if you will?
Yeah, like we've been speaking, I think IT is definitely one sector, especially large cap IT, where the numbers clearly have tapered off, except for exceptions like KPIT, which we just spoke about some time back. I think broadly, if you look at the entire IT pack, there seems to be a tapering off in terms of growth. There seems to be pressure on margin, and there is the big impending threat of AI. So how TCS recently announced that a lot of call centers will be replaced by AI. A lot of developers today already are using artificial intelligence tools, which are helping them develop and code much faster. So something that was done by a team of 5 or 6 people can today probably be done by 1 or 2 people. So the impact of that, in terms of how it will hit the services revenue for all of these large cap IT firms is very unclear, and markets does not like uncertainty. So if you combine slowing growth with an uncertainty of how this AI thing will play out, I think IT as a sector will remain subdued. I believe banks, the private sector banks also are, in a similar, of course, ICICI is doing very well today, and Bank Nifty, I think, has hit an all-time high today. But broadly speaking, I think banks and NBFCs also should remain range bound, because this was the, darling of the last bull market. So all of these stocks are over-owned. They are there in all the portfolios. So that huge incremental demand is unlikely to come for both IT as well as banks. So I feel, especially private banks, PSU banks are under-owned, and PSU banks are doing well, and I think they'll continue to do well. I think this private banks and large cap IT is where I will be more cautious.
Just wanted to address a number of Ultratech for you. It looks like it's a beat when it comes to the profitability, because the number has come in at 2,260 crores versus our expectation of less than 2,100 crore rupees. And even in terms of volumes, there's a decent amount of traction as far as volumes is concerned. They've recorded a volume growth of 13% for the entire year FY24, and in Q4 FY24, the volume was double digit at 11%. and the full year EBITDA per ton has been at 1100 odd rupees. So I'm guessing that's a decent number coming in from Ultratech at this point of time. The total effective capacity utilization was also 98% for the quarter and 85% for the full year. So that tells you that perhaps in the end of the year there was a bit of an uptick that happened in capacity utilization, probably building in the demand that the company is expecting going forward as well. The capex program is pretty much as per schedule. There doesn't seem to be a big change there. The grey cement capacity is well augmented at around 199.6 million ton as well. The overseas capacity that they've mentioned is also okay. And for going forward, there's just one statement coming in from the company. Demand for cement across all sectors continues to remain robust, which augur well for the company. I know you can't comment, Prabhakar, on the numbers specifically of Ultratech, but overall as a sector, would you be a buyer in cement names or not really?
Yeah, I think cement is a great proxy for infrastructure. I think infrastructure is really taking off in the country. The government is spending, a big chunk of the budget on infrastructure. Whether it is roads, railways, ports, and cement plays a role everywhere. I think cement is definitely a good long-term opportunity, but it is again a sector which should not be played quarter on quarter because there's a lot of seasonality here. There are a lot of geographical, nuances in this sector. But as a basket, I think cement remains a very good proxy for playing the infrastructure theme, which is going to play out over the next 3 to 5 years.
Okay, Prabhakar, we'll let you go on that note. Thanks for taking the time out and joining us today.
If you like this video, then like, share and subscribe to ET Now.